Okay, but Dennis, if we were to take a long-term view about this, all this euphoria has to come to an end sometime. And is there a downside risk to all of this?
Yes, for property, it's very simple. The two main risks is, number one, should property prices fall? And number two, should you be unable to pay the housing loan installment? So for the number one risk, very simple. If you borrow 70%, you have a buffer for property price to drop by 30%. So if you borrow 70%, I find that it's quite prudent already. For the number two risk, you cannot pay the housing loan installment. So what you can basically do is stand by enough cash or CPF sufficient to pay for 6 to 12 months of monthly installment. So even if you cannot rent out your property for 6 to 12 months, you have no problem paying the money installment. And of course, lastly, like I mentioned, you should use a higher interest rate of 4% to plan your housing loan and your your property purchase instead of the current interest rates.
So is that what you're doing? Give us a call, 669-11938, and let us know what you're going to do. Are you going to rejig your mortgage rates? Let's see what this caller has to say. Good morning. Who's on the line, please?
This is Mr. Lee.
Mr. Lee, sir. Go ahead.
Yes, Dennis, good morning.
Good morning, Mr. Lee.
I wish to ask you, what's the difference between the swap rate and the SIBOR rate?
All right, Dennis, can you address that?
Sure. The swap rate actually involves swapping US dollar into Sing dollar. That's why it's called the swap rate. So other than the Singapore, while the Singapore interbank interest rate is actually the rate that the bank lend money to each other. So in actual fact, swap rate actually is based on SIBOR plus a market reserve cost for this swapping of US dollar into Sing dollar. So typically, in actual fact, swap sometimes will be higher than SIBOR, sometimes it will be lower. But because swap also involves swapping US interest rate to Sing dollar, so what it means is that it has this added volatility due to it will be affected by the exchange rate between US dollar and Sing dollar. So swap on the whole will be more volatile than SIBOR.
All right, sounds like a whole blizzard of numbers and principles. I hope that helped answer your question, though, sir. Let's see what Jeremy has to say. Hi, Jeremy. Good morning.
Hi, good morning, Keith, Bharati, and Dennis. My view is actually that when interest rate is as low as this, I would take a contrarian view and actually not buy, because if the only way for interest rates to go is to go up, right?
Right, I mean, what comes down must go up.
Indeed.
Yeah, when that happens, you know what will happen to the property prices. There's actually a inverse relationship between interest rate and property prices. I usually wait till interest rate is really sky high and people are saying, don't buy property and prices crash. Go in there, pick up a few, and then when interest rate falls, you make a tidy sum.
Right, right. I see what you mean, sir. Thank you very much for that, Jeremy. Dennis, what do you think of Jeremy's advice?
Yes, that's a very smart move. I always tell people the best time to buy anything, to invest in anything, is when nobody is interested. So the best time to buy property is last year, during the financial crisis when property prices were falling and nobody is interested. Even developers are not interested to launch new projects. So the best time to buy anything, even in stocks, is when nobody is interested, when there's bad news all around. But the worst time probably to buy anything is when it's near the top. Of course, we are not saying that now is near the top. But why I'm trying to say that, I think this gentleman has a very good point. The best time to buy or invest in anything is when it's bad.
Right. I mean, it's simple, right? Buy low, sell high, Indeed. Right? Basic. Let's see what Katrina has to say. Hi, Katrina. Good morning.
Hi, good morning to you. Okay, I'd like to ask if I don't have enough cash to invest in a private property, and right now I'm staying in a EA, is it a good idea to go for refinancing, with that sum of money, then I can invest in another property and earn a rental income?
All right, okay. Dennis?
EA, is it under HDB?
Ma'am,
HDB, yes.
So sorry, there's no way you borrow money on a HDB flat, whether it's an EA, a 5-room flat, and so forth. So sorry, there's no way for you to plan to do what you want to do, because you can't get any additional loan on your HDB flat.
Oh dear, Katrina.
I'm so sorry, Katrina. Yeah, I'm so sorry about that. So Dennis, in a nutshell, how should we behave from now on when it comes to property, from today, for example?
I think if you're talking about HDB resale flat, there is room for possibly the transaction price and the COV to drop further. So it depends on really what type of properties you are looking to buy and your objective of buying it. If you really need a property to stay in, and so it's actually no point trying to guess where's the direction. The main thing is affordability. But if you are talking about investing, so like that gentleman say, probably if you are just investing into properties, then probably you may want to hold on, or you may want to do it now, or if you want to do it now, probably the better chance will be in the high-end private properties, not in the low-end private properties.
All right, thank you very much for that, Dennis. That was Dennis Ng, founder of HousingLoanSG.com. And if you have questions or comments about your housing loan interest rates and how that is impacting your decision, do email us. Our email address, talkback@938live.sg.
938 Live gets you talking.